The following is an update and technical analysis on the Nasdaq 100 futures based upon the CME exchange off the daily interval, and I will as well as cover the US Tech 100 futures, S&P 500 futures, Russell 2000, the US 10-year Treasury note, and a deep dive as well into the 60-minute timeframes of the US Tech 100 and Russell 2000 futures. And suddenly, discussions of rate cuts were absolutely crushed today, backed by robust retail sales and an Atlanta GDP projection of 5%. You had Kashkari coming out strongly advocating for higher rates today, making a significant shift within the Fed fund rate outlook. And really, you have to think about the rates that were kept near zero for over a decade. So maintaining higher rates for, I believe, minimum 2, 3, 5 years on out is crucial to rectify the current economic imbalances, and malinvestments, all the distortions within the markets. And the surge in the 10-year yield is a clear signal of potential debt turmoil. Whereas you have the 10-year outlook as the supply and demand indicator for government bond issuance. Getting out of the rambling and deep diving into the charts here, starting off the Nasdaq 100 daily interval, where we have again this primary reactionary downtrend line with significant reaction right across this entire sphere here. Reactionary low, completely with multiple reactionary highs there, and we rejected impulsively off that initial reaction, coinciding with the 50-day moving average, call it a dual line of support, rejected really to the button right off that key inflection point. What I've added that's a little bit more significant, I believe, is this new benefit of the doubt secondary trend line. And I believe there's enough reaction to validate that space. Pure reactionary lows, multiple reactionary lows to help strengthen that validity. Whereas again, we are at a crucial turning point off the 15-130-26 price support there, call it a dual line of support. And I believe a solid daily counter close below ought to issue a secondary sell signal, whereas you have the 14-871-48 price support hovering down below as well. And that is going to be a crucial turning point, in my opinion. If we snap right through that, put in a much larger daily red counter close below that, I believe that'll issue a secondary sell signal based upon the primary reactionary low uptrend line that we had, where we had this first initial sell signal. You had the 15-980-75 price resistance, where we really rallied into a nice clean divergent low, had negative and bearish divergences really constructed amongst all three key technical momentum indicators, offering a nice clean objective entry short here, had a nice sustained counter trend, a dead cat bounce, and then put in that sell signal right off that primary reactionary uptrend line there. And it has been a wave of selling since, reacting really across the board here among some of these key technical levels. But this is a big level to watch, in my opinion, as well as the 14-871-48 price support. That, I believe, they'll more than likely be a lot more stops go off, and then ultimately the 618 Fibs trace may call it the coinciding with the 14-439-97 price support. That is a big level right there, and that is going to be a significant turning point. Call it a multi-year price support level with just a ton of reactionary highs and lows to strengthen the validity of that primary price support level. And I believe that'll be the neckline to a potential head and shoulder. It gives me that head and shoulder looking feel where you have the head here. Could make a case for a right side shoulder there, and then just a wave of selling if and when we end up getting there. The risk reward arena relies heavily to the long side as of now. We're setting some stops below, if not dollar cost averaging, scaling into your position for a bounce up above. Bull traders, long traders, they want to see a complete bounce from here, if not down to the some of these multiple price support targets down below on a scale in, and a short covering rally to the upside, and then ultimately re-challenging that primary downtrend line off the all-time reactionary highs of 2021. And they want to see a complete solid breakout right back into it, re-challenging the 15-480-630 price resistance, which coincides with the bottom of this primary trading channel. And they want to see a breakout above and a re-challenging of that structure there. Moving on to the US Tech 100 futures here off the daily interval. Some of the same picture here, especially for an active and or day trader, really to the button yesterday. That day trade right off that key 14-974-60 price support was good for, in a single day there, 1.8%. In a single day scalp there, rejected the very next day right off the 15-281-60 price resistance, and an additional day trade there, good for 1.6% drop. Talk about volatility in both directions, netting you some nice clean day trades for any active and or day traders there. And again, same picture here, nice clean divergent high, primary reactionary low, uptrend line here, where we ended up putting a breakdown sell signal, had a consolidation amongst that 15,281 resistance level, price support level, and we ended up snapping that, back testing it 2 days in a row there, came on and re-challenged the 14,974.60 price support there, and then ended up surging right off that key inflection point. Nice clean right to the button there, rejected right off that resistance, and we are trading around this 15,053 price range with the potential re-challenging of that 14,974.60. Bear traders, short sellers, they want to see a solid daily candle close below this price support level, issuing another wave of selling down to the 50% fibs retracement, call it 14,365.50 price support there. And I believe the bull traders, long traders need to defend that key inflection point really at all costs there, where you have the moving average convergence starting to test that zero line threshold, whereas the oscillator has already sunken below its zero line threshold there. And that is a key inflection point to watch, because you will expel a lot more technical damage within the MACD there. And then again, just I believe a stronger wave of selling, potential selling, if bull traders and or long traders do not defend this key inflection point heavily at all cost. Moving on to the US 500 to S&P 500 futures here, we had this primary parabolic primary uptrend line off the daily interval, and that it was a key inflection point to watch, where we put in just the velocity of that breakdown sell signal off the daily interval there. It had some minimal reaction across that 44.97 price support there, and to the button. It was defended heavily off the 90 price support there. Ended up having a nice steep counter trend rally right back into resistance off the 44.97 price resistance, and was rejected impulsively off that key inflection point, especially if you're an active end or day trader off the ES futures there. That was good for a 1.3% crash to the downside in a single day. And we are currently testing, if not trading slightly below the 44.40.90 price support as of now. And the near-term outlook is looking pretty grim for bull traders and or long traders. Same story here as far as the moving average convergence, testing its zero line threshold as of now, whereas the oscillator has slightly slid below that zero line. Stochastics 1033 is just consolidating, completely flatlined here, no indication. Whereas probably the more hazier indice here in the S&P 500 futures. Taking you out to the Russell 2000 futures here off the daily interval, I had mentioned how imperative it was to retest this concealed primary reactionary downtrend line. Major significant reaction right across the board there. Nice near-term divergent high. We had negative and bearish divergences constructed amongst all three technical momentum indicators, with a very slope trending downtrend here off the Stochastics 1033, and that has been just met with a wave of selling down to that key inflection point, hitting my second target there at that 1899 30 price support, and it looks like we're slightly trading below it as of now, and that was good for a 5% crash there right off the indice. And I believe some of these critical junctures, that is big support there, and it is being tested for the second or third time in a single intraday session there. Just a key inflection point. I can imagine stops that'll go off if completely broken down, and put in a nice solid daily candle close below that key inflection point with a potential back test. And I do have a minor uptrend line here with minimal reaction as of now, but some to follow up on, and or maybe potential play a bounce single day trade if and when we come across retesting that minor uptrend line there. And then ultimately the 1819.10 price support, and again, that is an additionally big key inflection point to watch, with just a multiple reactionary lows and highs to strengthen the validation of how strong a price support level of this magnitude can concur. And I believe algorithms, machines, big institutions will be following in on that key inflection point. Coincides with the 236 fibs retracement, and if we take that level out, that's going to be extremely bearish for a much larger move on a retest of that 1726 price support right there. And that is an even bigger price support level there for any long traders, swing traders to watch. But what's so significant about this 1899 price support is, again, zero line thresholds being tested as of now, whereas the oscillator is already just completely rolled over, coinciding with the Stochastics 1033 price support, and that is a big key inflection point, whereas the RSI is not in an extreme oversold condition as of now. So again, this could be a complete waterfall type sell-off tomorrow if and when that level goes. Moving on to the US 10-year Treasury off the daily interval. Again, this major inflection point off this primary reactionary uptrend line, highly validated with a ton of reaction, where we had that reactionary low set in, and we are breaking above what I had mentioned in that previous video, above the 420 price resistance, and that is being tested as of now, and we are just trading slightly above it. Where bond bears want to see, bond traders, bond short sellers want to see a solid breakdown in 10-year Treasury bonds right up above, issuing even higher rates, and just a huge technical damage that could occur and bring even further damage across stocks within the tech space and across all additional broad markets, where I would only suspect even further damage within the financial sector and banks that are hanging on by a thin rope off the side of a cliff there. And that would be a key inflection point to watch. Whereas a bull bonds, long traders, long bond traders, they want to see a breakdown, finally nice clean bidding across that process, and then a re-challenging of that primary reactionary uptrend line here to have any life being spurred back into bonds. Taking you out to the US Tech 100 futures here off the 60-minute interval. And really what had happened yesterday is we had a ton of reaction off this parabolic downtrend line, reactionary downtrend line, and I believe it was strengthened with a ton of validation. We ended up bouncing, breaking out, consolidating, backtesting, reacting right amongst that key inflection point solidly, where we had that nice clean hourly candle close up above, breakout amongst that key inflection point, and then we ended up running right into the 15,257 price resistance and were rejected impulsively off that key inflection point. That was a pretty significant hourly resistance, and that was just met with a wave of selling for any day traders and or active traders who end up catching a 1.5% drop to the downside, retesting this primary reactionary uptrend line as of now, and we are sitting on top of it. Whereas bull traders, long traders, they need to step in right here, right now, to avert an additional sell signal and a re-challenging where I've added this new key reactionary minor downtrend line here. Looks for a potential case of a what could be stemming out as a primary trading channel, downtrend channel. If and when we go to retest that key inflection point, which would be a nice clean objective entry short trade setup for a big move to the downside, ultimately breaking down among that primary reactionary uptrend line, honing into the 14,973.80 price support there as an additional target, the 14,872.40 price support as well, and then additionally we have the 14,790.50 price support there. Long traders, bull traders, they need to step in right here, right now to have an increased counter trend rally and spur any sort of life back in these momentum indicators that are just aggressively being pinned down below the zero line thresholds as of now. The minimum, what we put in yesterday, was a nice divergent low, minimum divergent low with positive and bullish divergences that were met, and that was a technical induced catalyst for this strong wave of buying to the upside, only being rejected amongst that key inflection point, a minor downtrend line. And again, we're just sitting across this primary reactionary uptrend line here off the March reactionary lows, and this is what it looks like here. So again, just key inflection points to watch off the March 2023 lows, and that is significantly being bid right off that key inflection point. We're trading on top of it as of now. So bull traders, long traders, they want to see a solid breakout above this key inflection point, ultimately challenging a ton of a resistance up above here as well, and just a strong weight of resistance up above to re-challenge potentially what I've added here, this primary reactionary, additionally primary reactionary downtrend line for a nice clean counter trend snapback rally if and when we get that to the upside. Whereas bear traders, again, short sellers, they want to see a solid breakdown and a re-challenging of these key price support levels, and then ultimately take them out for a much larger wave of selling down below, honing in on the 1618 pips retracement there. Take you into the 60-minute chart of the US cap, small cap, Russell 2000 futures here. And again, we could have potential positive divergence here, near-term positive divergence amongst all three technical momentum indicators. Not the most well-defined, healthiest looking technical momentum indicator. But again, you have some of these key inflection points to watch, where you have the minor primary downtrend line here as well, honing in up above. And you have the tan colored coded price support levels that coincide with the daily interval here. And these are some key levels and or targets to watch. If we take this level out, the 1891.93 price support here, we've already taken out the daily price support. If we take that level out, break down solidly below it off this 60-minute candle close, that could put further damage, just exasperate the damage among these technical momentum indicators, blow out these positive and or bullish divergences, and I would only suspect a very fast, stronger wave of selling down to the 1873.44 price support, hopefully trying to gain a bounce right back up to the primary downtrend line for a counter trend rally there. Very hazy charts all across the board within the 60-minute time frames. But again, just some key inflection points to watch.